The market is crashing. Have you wondered how to protect your money in the middle of this financial storm? Are you worried that a recession is just around the corner? You're not alone. But did you know that these moments of crisis can be the best opportunities to make money? Today, I'm going to reveal foolproof strategies to not only protect your money, but also grow your wealth in uncertain times. Are you ready to find out how? Let's get started. In the past few weeks, the stock markets have suffered significant drops. Have you wondered why? Inflation is still skyrocketing, and the Federal Reserve is raising interest rates to try to control it. But that's not all. Geopolitical tensions and global economic uncertainty are adding more fuel to the fire. Let's look at some recent data. The S&P 500, a key market indicator, has dropped 3% in recent days. The Nasdaq, which includes major tech companies, has seen an even larger drop of 3.4%. These numbers are alarming and have many investors worried. But what does all this mean for you? Well, if you have money invested in the stock market, you've likely seen the value of your investments decrease. And not only that, if the trend continues, we could be heading towards a recession. This would not only affect the financial markets, but also the real economy, jobs, salaries, and much more. So, what can you do about it? The key is to understand how to protect your money and, even better, how to find opportunities in the midst of this crisis. What does this market drop and the possible recession mean for you and the economy in general? Let's break it down. First, immediate effects on your investments. If you have money in stocks, mutual funds, or any other financial assets, you've probably noticed a decrease in their value. This can be worrying, especially if you depend on these funds for your savings or retirement. But remember, market drops are part of the economic cycle. Second, impact on the real economy. A recession doesn't just affect investors, but also the daily lives of people. We could see an increase in unemployment, wage cuts, and a decrease in purchasing power. Companies tend to cut costs, often meaning layoffs or hiring freezes. Consumers may become more cautious with their spending, which in turn affects businesses. But what does a possible recession mean for the average citizen? This is where we need to pay attention. Although it sounds scary, being prepared and well-informed can make a difference. Knowing how to protect your finances and where the opportunities are can turn a negative situation into a strategic advantage. Finally, understanding the long-term outlook. Recessions don't last forever. Historically, markets have shown an impressive ability to recover and reach new highs. This means that although we face tough times now, there is light at the end of the tunnel. Preparing properly can help you not only survive these tough times, but also thrive when the recovery begins. With this analysis in mind, let's explore specific strategies you can implement to protect your money and take advantage of the opportunities that arise in times of crisis. Diversification of investments. First, let's talk about diversification. Think of your investments as a basket of fruits. If you only have apples and they rot, you lose everything. But if you have apples, oranges, and bananas, you still have something if the apples go bad. The same goes for your investments. Don't put all your money into one type of asset. Here are some ideas. Stocks. Investing in different sectors can protect you. For example, if part of your portfolio is in technology, another part could be in healthcare or energy. This balances losses and gains. Bonds. These are generally safer than stocks and can provide stable income. Consider government bonds or high-quality corporate bonds. Real estate. Investing in properties can offer stability, as real estate tends to hold its value over the long term. Think about real estate investment trusts if you don't want to buy properties directly. Mutual funds. Index funds and mutual funds allow you to invest in a variety of assets without the need to manage them actively. Defensive investments. During times of crisis, some sectors hold up better than others. This is where defensive investments come in. These sectors include healthcare, Pharmaceutical companies and healthcare services are essential and usually less affected by recessions.
If this video is opening your eyes to finance, hit like to support this channel and help us keep uploading more content. Comment on your biggest revelation so far and subscribe with the bell on so you don't miss any financial secrets. And if you have a friend or family member who could benefit from this video, spread the word by sharing it. Let's continue with more strategies that will change your financial future.
Consumer staples. Companies that produce food, beverages, cleaning products, and other essential goods tend to have constant demand, regardless of the economic situation. Utilities, electricity, water, and gas companies are necessary for daily functioning, so their revenues tend to be more stable. Staying calm. It's crucial not to panic. Market drops are normal and part of the economic cycle. Here are some tips to stay calm. Don't sell in panic. Selling your investments when the market is down only ensures you lose money. Instead, maintain a long-term perspective. Review and adjust. Evaluate your investment portfolio and adjust if necessary, but avoid making drastic changes based on fear. Continuous education. Stay informed about the market and economic trends. This will allow you to make informed decisions and reduce anxiety. These strategies will not only help you protect your money, but also position you to take advantage of any opportunity that may arise in times of crisis. Now that you know how to protect your investments, let's see how you can even make money during a recession. Now, let's talk about the opportunities that arise when the market crashes. Yes, you heard right. Even in times of crisis, there are ways to make money. Let's see how. Buying at low prices. When the market falls, the prices of many stocks and assets drop. This can be a great opportunity to buy. Think of it as a big sale in a store. Here are some key points. Undervalued stocks. Look for solid companies with good fundamentals whose prices have fallen. These can recover and offer great long-term gains. Historical examples. During the 2008 financial crisis, many stocks fell to low prices. Those who invested during that period saw significant returns in the following years. Focusing on the long term. Investing with a long-term vision is crucial. Market drops can be scary, but history shows that markets tend to recover. Here are some strategies. Maintain a long-term perspective. Instead of worrying about daily fluctuations, think of your investments as marathons, not sprints. Dividend reinvestment. If your investments generate dividends, reinvesting them can increase your long-term gains. Investing in emerging sectors. Crises can also be times when new sectors or technologies emerge and grow rapidly. Here's where you can find unique opportunities. Technology and innovation. Companies developing new technologies or innovative solutions can have great growth potential, even during a recession. Renewable energy. With the increased focus on sustainability, companies in the renewable energy sector can offer interesting long-term opportunities. Opportunistic investment funds. Some investment funds are designed specifically to take advantage of opportunities in volatile markets. These funds can help diversify your portfolio while taking advantage of market drops. Private equity funds. These funds invest in unlisted companies that can have great growth potential. Opportunity funds. Some funds actively seek undervalued assets during economic crises. Taking advantage of volatility. If you have experience and risk tolerance, you can take advantage of market volatility with advanced strategies like short-term trading. Investing in stocks short-term can generate quick gains, although with higher risk. Options and futures. These financial instruments can offer profit opportunities in volatile markets, but require deep knowledge and careful risk management. Remember, opportunities are there, even in difficult times. The key is to stay calm, do your research, and make informed decisions. And that's it for our strategies to protect and make money in times of crisis. What did you think? Let me know your opinion in the comments. If you like the video, don't forget to like it and subscribe to the channel for more content about investments and finance. Activate the bell so you don't miss any new videos. See you in the next one. Keep investing wisely and taking care of your financial future.